It's time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
Okay, so Atlas Engineered Products, AEP on the TSX Venture, trading right now for about 43 cents. And it's a micro-cap company, barely a micro-cap actually, with a market capitalization of about $21 million. And what Atlas does is a Canadian-based supplier of trusses and engineered wood products. So it's engaged in the manufacturing of trusses for commercial and residential buildings, and it delivers to customers on Vancouver Island and in the Lower Mainland. So the main theme, I think, right now, the main thing that we want to point out and notice about the company right now is that they've just recently transitioned into bottom line profitability in their last quarter, and we've seen a slight uptick in the share price since then, about 9%, since the quarter was released on July 29th. On March 5th, the company completed the acquisition of a company called South Central Building Systems for about $2.5 million. So looking at the recent financial performance, the company generated absolutely fantastic growth in revenues for their second quarter. Second quarter revenues were $9.1 million. That's an increase of 196% over the previous year. Adjusted income was about $600,000 compared to a loss of $112,000 in the second quarter of last year. So that is the transition into profitability that we like to see. And adjusted EBITDA was about $1.6 million compared to $106,000 in the previous year. Looking at the company's outlook, it does appear that management expects the positive results to continue. So the company's revenue objective for 2019 is to reach an annualized revenue run rate of about $40 to $50 million and an EBITDA margin of about 10 to 15%. Now, looking at the valuation here, the valuation based on the EBITDA would be about 38 times trailing 12-month EBITDA. But really, with a company like this, we have to look forward. I mean, a 38 times multiple to EBITDA is extremely expensive. We would never even consider a small company like this trading at that multiple if there was not a significant amount of growth going forward. But the company's first half of 2019 has been a strong turnaround, and they are looking for positive results going forward. I would say this isn't a company that we would rush out and buy, but it's definitely something that is very interesting, and we're going to pay close attention and see if they're able to hit those guidance numbers over the next quarter or so.